Dear participants, welcome to Storent Holding Investor Webinar. We will start with company's presentation, followed by a live Q&A session. If you would like to ask your question to the company, please use the Q&A box at the bottom of your screen. For your convenience, we are recording the session and replay will be available shortly after the call. That being said, I'm now turning the call over to our hosts. Andris Pavlovs, co-founder of Storent and chairman of the board of Storent Holding, and Baiba Onkel, CFO of Storent Holding. Please.
Hello, everybody. Welcome to the Storent webinar. I would like to say thank you, everybody who joined this webinar, our existing investors and probably future investors. We would like very shortly explain what we actually did and what is our plan, our future plan. We promised to deliver results on a last webinar when we issued previous bonds, and here you can see what actually we have done during 6 months. We reached historically the highest revenue of Storent Holding. We increased our sales from 47 millions to 63 millions. We increased EBITDA almost on 10 million euro, from 13 millions to almost 23 millions. We have profit approximately 5.4 millions. And as previously and today, we are still leader in rental process, and we will be the leader in digitalization and online sales. At this point of time, we have 35 rental depots, and we have 150 million euro fleet in original cost of equipment. We have team approximately 275 employees, but the biggest improvement which we reach this year, this is because we entered new market in the United States. I will describe later a little bit in more detail what our plans and what we are going to do in USA. Baiba, please continue.
Yes, thank you, Andris, for introduction, and welcome all our investors and potential investors and other persons who are interested in our operations. So firstly, I will go through our operations, a little bit describe how we organize our business. Then Andris will tell more about technologies and entering in the USA market. And then I will tell about the financial results and of course about the bond offering, which is already started yesterday. So Storent operates in three markets. Our roots come from Latvia, so we started in Baltic market, and right now this is our main market. The equipment rental size in this market is about €500 million. Then the next market where we enter is the Nordics. The market size is 5 times bigger, but our market share there is smaller. And the newest market where we enter just in the end of September is USA market. It's the largest equipment rental market in the world with €75 billion. So a lot of potential there to grow. And right now we are offering the bond issue under a program of 50 million. This bond issue is in amount of 18.5 million. Subscription has started yesterday and it's valid until 2nd of December. One bond value is €100. And we offer coupon, right? 10%, and coupon is paid quarterly. Maturity date is 2029 June, so 3.5 year bond. And we offer also exchange for the two bond programs with exchange premium 1% and exchange is 100% guaranteed. And main use of proceeds is for refinancing existing bonds and for future corporate purpose for company growth. So why to invest in Storent? So Storent is growth story. So we are constantly growing, as Andres already described. We differ from other rental companies with digitalization and online sales. So technology, IT technology is one of the key pillars of our business. We have very solid marketplace in the market. In Latvia, we are number one. In Baltic, we are number three. And specialists in Nordic countries and a lot of potential to growth in US market. And we have proved also as a bond issuer in the capital market since 2017. Right now we have more than 4,000 investors from 17 countries. So, what's behind our business? How do we see our business in the future and how we build it? It's our vision is to be the most innovative rental company in the world, powered by a team of experts who set the new industry standards through smart technology, exceptional service, and sustainable solutions. Andres will tell more detailed, but yes, we build our business on four core values. That's being charged, seek knowledge, keep moving, and enjoy the ride. So we are enjoying our ride already for more than 17 years, since 2008 when we started in Latvia, then very rapidly opened subsidiaries in Lithuania and Estonia, and in 3 years we became top three player in the Baltic market. Then our growth story continued in 2016 with acquiring the company in Finland. And we also entered in the Swedish market in 2017. So bond financing is very crucial part of our growth story because first bond issue was exactly for the M&A deal in Latvia. And more rapid growth started since 2023 when the ownership has changed and now company has clear vision how to grow and what are our targets in the future. So holding structure is very transparent. So the issuer is Storent Holding, and we are holding company, and under it is subsidiaries in each of the countries. We also organize our business based on regions. So we have CEOs in each of the regions who are very great experts in the rental industry for at least 2 decades. And it's our owner structure is also very clear and simple. So we have two owners owning company in equal parts. Anders is also owner and CEO and co-founder. So here since day one, and his partner Aries that has joined Storent in December 2022, and they share common vision for future growth and expertise in this industry. Our supervisory board consists of three members, and we are proud to have also an independent member, Daigauziņa Melnāksne, who brings very important expertise in our team. We both are in the management board and responsible for all operations. And of course, we have great expert team who like the rental industry and like also technologies. For more than 2 decades, we like this industry and see that we can change it and bring the future based on technologies and of course of expertise of equipment. So our business is based on the key three pillars. So one is, of course, is our team, people. So we introduced in our company high performance culture. So we are focused on efficiency, an expert team, and all team are working under the same values. That's very important. So we have the same the same directions for the future. Of course, the equipment is very essential part. So we also have very good expertise, and our fleet is worth of more than 150 million in acquisition value. And technology, where we have created our own ERP system and implementing digital solution, and lately also the artificial intelligence tools as well. So our geographical split in revenues, 60% of our income comes from Baltic. So Latvia makes 1/3 of that, and here we are. It's our home market, and here we are leader, and we see that we can grow our market share here as well. Then comes Lithuania and Estonia is the third place from the Baltic countries, but also potential there is we see the potential for growth. So in Nordic countries, we are specialists, and Nordic makes 19% of our total revenue, and the newest member of Storent Group is the United States, generating 21% of the revenue. Market share. So as I mentioned, we are leader in Latvia. We are number 3 in Estonia and number 5 in Lithuania, since the Lithuanian market is more diversified. But in total, it makes number 3 in the Baltics. We also operate with split rent model, which allows us to generate extra income on top of our own equipment. We have quite wide rental depot network, in total 35. Very good sales team expertise with very structured sales process, modern rental fleet, and an experienced and dedicated team. Our fleet is worth of 150 million in original acquisition value. This means the value what we purchased. That, and the biggest product groups are bigger machine, like earth moving machines, lifts and working platforms. Very developed product group is telescopic handlers, which is where we are specialists in Nordic countries. We serve also scaffolding in Baltic countries for renovation projects. In Nordic, we have cranes, but US operation brought our fleet agriculture and landscape equipment. We are number 1 in generators in Baltic countries, and then comes different other product groups. We work with premium equipment brands, Western, and lately also we started with high quality Chinese brands. So it's for us, it's very important to serve customers and deliver equipment what they can use in their work and increase their efficiency. Our customer base is very diversified, so we serve in a year around 12,000 customers, and it's almost 90,000 rental transactions. Our industry is related to construction, but on top comes many other industry, road infrastructure. We know right now Rail Baltica project where it's very much related with that industry. Also, we serve manufacturing, farming, renovation, entertainment industry, where our generator product group is serving customers very strongly. Is growing lately military industry with military construction and directly serving to the armies, energy sectors with renewable solar parks, and in the US, it comes also the pipeline industry, which we're serving. So very diversified industries with wide range of product groups. But now I give word to Andres and tell more about technologies.
Yes, we are still continue to invest in our technology. It's one of our also main pillars on which stays Storent. And of course, our target to increase, first of all, to increase efficiency of our employees. We are continue to invest in our ERP systems. We are calling our ERP systems intelligent rental management systems. We already, as you see, our estimations for 2025, we would like to increase our sales per employee to 230,000, and it's significantly increase. Of course, we are working in two directions. First one, to increase efficiency of our employees. We start to digitalize all sales processes, all repairing of and maintenance of equipment. We try to find any point of our business process which should be and actually must be digitalized. And we are doing very well. I think, my personal opinion, we have at the moment the best ERP solutions in rental industry. And of course, the second part on which we are working, this is how we are working with our customers, how we are communicate with our customers, and this is very important. Still, our industry is very conservative, and actually a lot of people still prefer to call, not just to go online and order something. But this is very, very, very quickly changing in a couple of last years. If, let's say, according different surveys, these people, we had approximately 2 to 5% some 4 or 5 years ago, people who was ready to order equipment online. Now it's between 20 to 25% already the people who is ready to go and order equipment using online. And of course, this process should be very efficient in nearest future, because a lot of people still prefer to send messages, to call to our salespeople, and because at the point when they are going to order something, they don't know actually what equipment could be better fit for their needs. And what we are doing today, we are already testing solutions. We are creating artificial intelligence sales agent. Already our salespeople testing this agent internally. And I think we will be able to launch between 3 to 6 months. We will be able to launch this artificial intelligence sales agent for our customers. What it will bring to our customers? Actually, it will bring excellent experience. They will be able just to call or send WhatsApp message, and again, agent will be able to suggest equipment. It will be able to negotiate the price. It will be able to make reservations instead of customers. And if customers want to check it, systems will send some message, WhatsApp message or just message or email with a link where our customers will be able to log in and check these reservations, which will be made by our artificial intelligence agent, and approve, or they will be able to approve even at the end of the conversations with the agent. Actually, this is a new way of making online sales. It will bring experience, the same experience, even probably better experience sometimes. Agent will be able to offer better solutions than probably people who is selling our sales rep or customer service, because the informations which will have agents, and ability to do these things, it's very, very wide. And actually, we are testing today, and I'm excited to see how it's working. It's actually something new, and I think this is significantly will increase our online orders. And of course, we are using artificial intelligence not only for our customers to make the orders. We will use also artificial intelligence in our internal to increase our efficiency of our employees. Actually, today already we have the systems when if persons don't know something about the equipment, it's just could ask some agent, and agent will be able to provide all informations about the equipment, history of this equipment, when this equipment was bought, when actually last time it was repaired, and a lot of things like this. Also, we try to increase efficiency of using our systems. If coming new employees and they don't know how to use our systems, they could just ask artificial intelligence agent how I can make reservation or how I can make quotations and what I should do after that. Actually, they will get detailed instructions how to proceed with our systems. Actually, this is significantly increase efficiency of our employees and decreasing the time when our employees learning how to do and what to do in a store. And actually, these digitalizations, it's not just we are not using just for some advertising of store, and this is our DNA. This is from day one when we start our business. The focus was for digitalizations. We had first rental company which had customer area, customer cabinet, we are calling in a word. Actually, we launched first customer portal in 2010. The biggest company in the world, rental company, United Rental, a couple of years later. And our customers can see using this portal all informations, all agreements, delivery notes, everything. Actually, we are really believe that technology could change rental business and what we are going actually to do in United States. This is according our as described in our mission and vision. We would like to redefine rental business, and we would like to do a little bit different, maybe a little bit more, maybe not, but different than other rental companies are doing today. Let's go to United States story. Yes, we last time, as I said, when we had our webinar, we promised that we are going to buy a rental company in United States, and a lot of I don't know, somebody believed, somebody also in some articles we read that some journalists said that this is just for advertisement to raise the bonds and to find how to attract attention of investors. But this was real story, and as you see, we closed the deal at the end of September. We bought 70% from rental company, Connect Rentals. It operates in Texas. This is the biggest market in United States. The biggest construction market in United States, it's Texas. And three biggest cities, rental cities, where rental market are the biggest one. It's Dallas, Fort Worth, Houston, and Austin. This company leads two persons, Cody and Shell, excellent people who know the industry. They've been working 20 years in rental business and before in construction business and connected to the construction business. They did great jobs. They built excellent company with excellent results. As you see, 13.5 million in euros EBITDA, 7.2 EBITDA, 13.5 revenues, and 5 million profit. And a lot of people asking also when I had some interviews, why these people actually sold this company to you, not, I don't know, United Rental, Hertz or somebody else. Actually, a lot of small and middle-sized companies, owners in United States, don't want to sell biggest one, national companies, they company, because they are afraid of actually they are building for 20, 30 years business, and they have employees they like a family members, and they care about what will be what the future will be for their employees, because if they would sell to national companies, most probably, I don't know, 70-80% will be fired or leave the company in a couple of 3 to 6 months usually, yes. And for them, it's very important to keep the team, to develop the company, to keep the brand. And this is actually going align with our strategy, what we are going to do in United States. Could you go for the next slide? This is, could you switch to next, Bible, please? And I will be back to this after describing of model, how we are working in United States, going to work. And this goes to according our strategy, in direction with our strategy. Actually, we are going to build network of independent rental companies. Actually, we don't want to build one huge company. We don't want to work like we are working in the Baltic countries. If we could compare with Latvia, for example, or of course, it's to understand much easier if our outlets, Lithuanian, Latvian outlets, will be like separate companies with a separate brands, separate team management, but at the same time they had owners, Storent USA, from 51 to 70%. And we see for this model, this is we are calling Storent Equity Network. We are going to buy small, middle-sized companies. At this point, we bought only one, but already we have 2, 3 potential targets with whom we start discussions, but nothing at the moment. We do not have any letter of intent or term sheets. We just start discussions. It will take some time. Of course, it's not very fast process, but we see there are a lot of potential to build these small and middle-sized companies, because altogether 25 to 30,000 in United States and Canada. Market is huge, 75 billions. It's approximately 60 to 70%. It depends on resources from global rental market. And the national players only around 35%, the biggest one. And 50% of the market, at least 50% of the market, this is the small and middle-sized companies with the sales starting, I don't know, hundreds of thousands up to 50 millions. And our strategy to build 2 networks. One network, it's equity network. Another one, it's a Storent digital partner network. Why we are going to build like a 2 networks? Actually, because resources are limited, and we understand that we would not be able to buy, I don't know, 10, 20 companies in I don't know, in 1 year. It will take some time to buy companies, to raise the money, and to deliver to results to bondholder in the future, probably to our owners if we will go to IPO nearest future. But Storent Digital Partner Network will help us to accelerate this growth, and actually Storent USA could become like serious competitor national players. And we are going, of course, on a different conditions, but we are going to provide all infrastructure, all our digital solutions to both network. Please to the next slide. Equity-based consolidation platform. We are going to buy from 51 to 70%. It depends on negotiations, and we are also ready not just to buy and give some cash to the owners, but also we are ready to invest as additional equity in a capital. Our target that existing founder will continue to lead the company, will continue to sell. Actually, we are not to go to change anything in a company. We just wanted to add something. What we are going to add? Our experience, know-how, digital, NIE driven ERP backbone. We know how to bring financing for these small, middle-sized companies. Also for Connect Rentals, we agreed with the first merchant bank revolving credit, which actually gives them almost unlimited opportunities for capex, and of course we would like to help them to organize financial management and to work not just by feelings, but having precise KPI benchmarks, because small and middle-sized rental companies in United States, a lot of these companies working just by feeling, yes, and they do not have advanced IT systems and also some analytics like Power BI analytics reports where they can see utilization, dollar utilizations, and things like this. But what we offer to our equity partner: flexible entry model, buyout or equity injections, access to growth capital for free modernization, digitalization, full integrations with our ERP systems, access to national visibility, because we are already tested many years in the Baltic countries. Platform it's calling Preferent, and actually we are going to adjust this marketplace to United States. It will be Storent USA marketplace. That's why it's calling SUM, Storent USA marketplace. And we have very advanced solutions, freight platform, cargo point to organize deliveries, and in United States taking into account the distance between the cities and locations. It's very necessary to optimize the cost and to get efficiency. And our target to buy in the next 5 years up to 10 companies. But for digital partner network, we are actually idea to combine small and middle-sized rental companies in one, let's say, I am calling digital federations of independent rental companies. It's we also can provide all our experience, the same which we able to provide to equity partner, but without, of course, financial input. We are not going to provide some financing from the banks or financing from the Storent USA, and we want to join these companies based on common ecosystems, which will consist of IRMS, Storent USA Marketplace, Cargo Point. In the future, this Storent USA Marketplace, it's also, you should understand, it's not like platform where our customers will be able to only order equipment. It will be also like in I described previously, using artificial intelligence and artificial intelligence agent, it will be possible. But also this is a platform for cooperations for small and middle-sized rental companies. They will be able to re-rent equipment each other, to share. We are calling this sharing of equipment. they will be able to re-rent equipment from third parties, like some dealers who is ready to provide rent for some long period of time. In the future, idea also that probably some leasing company can provide also leasing and possibility to finance equipment, but these small and middle-sized companies. Of course, the idea using equity partners and digital network partners, idea is to combine purchasing powers, because today what small companies does not have, big ones have technologies. Second one, it's a highest price for new equipment. Sometimes it's approximately 20 to 40%. In average, I would say 30% higher prices than big national companies on a investments on a capex. Second one, they do not have a good, they cannot good possibilities to get financing of equipment, and of course they need some knowledge about how to use technologies and how to go in this direction in the future. Our plans in next years to connect some 500 companies in United States, taking account that approximately small and middle-sized companies number in United States at least 10,000. I think it's absolutely doable. But we will start to do this at the end of 2026. Actually, today we are focusing on a building Storent equity platform. We bought first company. We are now in process of adjustment our solutions for two USA markets, and we have plans to launch our ERP systems at the beginning of April in Connect Rentals. Now our team is actively working to do this, and at the end of 2026 we will be able to start to launch digital partner network building process. And of course, we will participate in different exhibitions like our exhibitions, American Rental Association exhibition, a conference to present our ideas. And we already, as I said previously, have 2-3 potential targets which we actually could buy or invest in equity. And of course, we already have some potential 3 to 5 companies who is ready to join digital partner network. Baiba, you can
Yes.
dive.
So thank you, Anders, for bringing us in the future how Storent plans to grow. But it's very important also to see what we have achieved. So this acquisition has actually quite significantly impacted the company's value, enterprise value, and also the equity value. And as you hear, our expertise is not only in the rental market, but also in the making M&A deals, which is very crucial for the future growth. And here in comparison, we want to show how company value has changed with this acquisition deal in the USA. So last year our EBITDA was 13.3 million, and we estimate that our enterprise value is with multiple 6, because we are in 5 regions. We have quite wide rental depot network, diversified customer base, and of course expertise, and that made our value almost 80 million euros. We had a debt 52.5 million, and it makes the equity value 27.4. But with this acquisition, we got additionally EBITDA significantly increase. Of course, we increase also EBITDA in the existing market. Now I'm telling the numbers of last 12 months at the end of September. So in total, our pro forma EBITDA is 22.6 million. So it significantly grew. And with that new market, which is with a very large potential, our multiple is could be right now already 7. That's let's say that's a quite conservative approach. And that makes our enterprise value almost doubled. We, of course, we needed money for this acquisition, and thank you for all bondholders who believed in us and invested in Storent in April when we had that idea and plan. But anyway, the equity value has significantly grown with this deal. So this is to show how M&A deal can help company to grow the company's value. While we are focusing on organic growth, the M&A deal can significantly increase the enterprise value. This means actually investors' security on the company's assets and company's future growth. But going very important is also to see the numbers. So here are our latest performance at the end of September. So we are reporting last 12 months based on pro forma. Pro forma means that we are including US company in our reporting with assumption that it have been in our group since for the last 12 months. So this is including USA operations.
Yeah, I would like to add, this is very important because we cannot report without pro forma because we raised the bonds and we took some money from the banks, and this is immediately is in our balance sheet. And to show the effect of these investments, for example, in USA, and results of M&A deal, we need to take back and show what is the EBITDA what EBITDA is actually bought. And this is really, you can compare like investors what is the actual results and what is the actual effect of this M&A deal.
So yes, our total sales are growing, and especially it's growing rental from our own equipment. So that's also is improving EBITDA and profitability measurements. And here is a slide how our let's say EBT bridge. So of course the revenue grew by 16 millions. With the USA, of course, the cost base also grow in existing markets. We are very strongly limiting the cost growth by introducing this high performance culture. Of course, by investing also depreciation is growing and interest rate, but at the end that makes much better EBT.
But important to mention that we have excellent result also in the Baltic countries. We had excellent growth on our own fleet because of our investments, because of changes in the companies, because of implementations, high performance culture in our company. Actually, our team did great job and we had excellent result. We again will have historically highest figures and highest results in the Baltic countries. This is our driver. Baltic countries helps us also to deliver the company and actually to help us that our team in Latvia, Lithuania, Estonia, and also Finland, Sweden, they helps us to go to United States and actually to realize our plans in United States, because without good results in the Baltic countries, it also would not be possible.
Exactly. So also our asset base has grown significantly. It's almost 150 million. The biggest growth is in the equipment rental part. Of course, intangible assets, it's also growing because when the M&A deals happen, it's usually goodwill from these deals. But we have also developed our ERP system, and it's under in intangible assets. So the 91% from our assets make non-current assets, and the smaller portion is our account receivables and a small amount of cash, which is normal actually for our business. We don't need to keep large cash reserve because we have constant cash flow. Our equity is 34%, which is also quite in the line of industry performance. And more deeply to look into the assets and non-current assets. So our rental fleet, exactly our rental machines, we are show them in the fair value, and at the end of September it was 105.8 million. So we switched to this fair value to show the real value of our assets. And it's 20% higher than our interest-bearing debt. You see that our proportion of interest-bearing debt consists of three main parts. So bonds is the largest proportion with 41 million. And then comes the leasings where we finance our equipment. And then comes other borrowings, which are also related to equipment purchase. It's producers financing and leasing with buyout options. So definitely our growth indicator was the increase in the fleet. So here you see our fleet development in the original acquisition values from the 9 million in the first year. Now we have the fleet in 150 million. Recently, we did in the last 3 years quite significant investments. So 53 million were invested in the existing markets, plus 23 million came from US operations. So we are regularly renewing our fleet. The lower line, you can see what is the amount what we are disposing, and it's replaced with the new equipment. And here we see also how much our fleet grow by acquisition. So from the Finland, it came additionally 15 millions. From Cramo operations in Latvia, the M&A deal, it came 10 millions, and here the latest 23 millions from USA rental fleet. And as a bond issuers, we have also financial covenants. We have two covenants, equity ratio, which should be as a minimum 30%. We have now 34%. And net leverage ratio at maximum could be 4.5. The industry standard is 4.5, from 4 to 5. So we have lower than 4, 3.81 in the latest financial reporting. And now I come to the last part about the bond issue. So we are bond issuers since 2017. So two programs are already redeemed, and three programs are active. And now we are offering to exchange two older programs to the new bond issue. Yes, we have around 4,000 investors, and our bonds are listed in the Nasdaq Riga regulated market since 2018. So we have quite long experience to be in the official list and prepare our reports and other regulations according to higher standards. So, terms of the bond offering, so issuer Storent Holding, they are unsecured bonds, but with guarantees from Storent SIA and Storent UAB, who makes more than 50% of the total sales and who holds majority of the assets of Storent Group. The program size is 50 millions, but right now we are issuing 18.5 million. One bond value is 100 euro. So investors, even with very small amounts, can be in our investor base. Coupon rate 10%, paid quarterly. Maturity date June 2029. Yeah, and we offer also exchange for existing bonds with 1% premium. Our main partner, lead arranger, is Signet Bank, and with distribution partners in all other Baltic countries. Yes, and use proceeds. What's important where we use this money, as I told, that the main reason is to refinance existing bonds which are due this year December 10.2 millions, but we offer also the next year maturity program to exchange if investors want to do that. We plan to continue invest in the fleet, so that's general purpose. And we have also a small loan to refinance, and we will use that money for that. And how to apply? You have to have opened investment account in the Baltic Bank or brokerage company, search for our bonds or corporate action. So new bonds is when you want to become our bondholder, or exchange if you want to exchange previous bonds to the new bond program. And that's actually all from official part. And now we head to Q&A session.
Bye, Andres. Thank you. We indeed now turn to the questions. Participants, to join the discussion, please submit your questions through the Q&A window that you see below the presentation. I'll remind that questions can be asked either anonymously or with your name. We have received quite a bunch of questions, so it's going to be an interesting discussion. We'll start with the questions submitted prior to the call. Here comes the first one. Why financial report of 2024 is not audited?
They are audited, and you can find them in our webpage. Maybe confusing can be that prospectus were made in the spring this year based on unaudited numbers. But definitely you can find until financial information on our webpage.
Thank you. How does Storent justify its enterprise value, based on which calculation is value achieved?
Yeah, so I already tried to explain in the presentation that it's based on the multiples on the rental market expertise and our experience, and of course of our knowledge on the market situation.
Mm-hmm. Is entering the US market justified, and what are the company's risks in this regard?
We don't see a lot of risks in this regard because we are not going to change anything in Connect Rentals. Actually, the same team, the same people, they will continue to operate. And actually, we would like to step by step to add something on the top, our knowledge, our know-how, not disturbing actual businesses. This is our main task. And we don't see at this point of time any huge risks with existing team, because I think we are really lucky to buy Connect Rentals because the team is excellent, professional. Of course, could be some global risks, but it could affect any companies. But with this specific target, we don't see any huge risks.
Thank you. There is public information about the optimistic development scenario. I would be interested to know what the action plan would be in the pessimistic scenario.
Pessimistic scenario, it's only organic growth actually, without any additional M&A. Because if we would if we would find some new targets in United States, of course we will need financing, additional financing, and of course we are thinking how to not to breach our covenants, bringing new financing. What is the effect of these acquisitions will be for our total balance sheet, for equity, for EBITDA. Of course, we are counting every day to follow the prospectus, to follow covenant, which approved our investors. And of course, as I said previously, we are considering IPO options because we understood that in one point of time we will need to increase our equity to further develop the company. But as I said previously, we now focusing on increasing equity value. We are very close to our target of 100 million euro, and probably in nearest future we will consider IPO.
As the bonds won't be guaranteed by real estate, where do investors would stand in line in using regular companies' guarantee?
So technically, they stand together with all other unsecured creditors. But as I explained, our rental fleet fair value is 20% above the interest-bearing debt. And the Storent SIA and Storent Web holds the majority of these assets in their balance sheet. Because Storent Holding is a holding company who owns subsidiary, who owns equipment.
Thank you. Given the equity ratio covenant of 30% and the fact that you are already close to this threshold even before adding new debt of approximately 7 million, how will you finance further growth that you described?
As I mentioned already, I think I answered to these questions. We're very carefully following our covenants, and we know that our 30% equity limit should be. And of course, we are, as I said, we are thinking about the equity increase in the future. And as I said, we are very close to the 100 million equity value. And I think in nearest future we will consider IPO to increase our equity. It's clear for us that in one point of time it will be on the table.
Given profitability in the last period, why are reserves down and total equity slightly down? Is it presumably due to dividend distribution?
No, I think it's mainly because we are writing these reserves of revaluations. Actually, as we described previously, we made revaluation of our fixed assets to represent fair market value of our fixed assets. And it was very important at that point of time because we had many years, very huge inflation, and now actually asset value did not represent real value of our assets. And now these reserves decreasing every year on the same amount on which we have higher depreciations, higher residual value of sold equipment. And actually it's fully offset by reserve when reserve putting in return earnings. But concerning about the dividends, yes, we are paying some dividends, but it's a very small amount of dividends. Actually, some part of my salary I am paying like a dividends. It's at this point of time, it's not more than 200 per year for each owners. Actually, we paid this year, we paid only 400,000 dividends to owners. Yes, this is like our part of our salary because we are paying our salary mainly through the dividends.
And on the same topic about dividends in future, what is dividend policy, especially given very tight equity ratio covenant and the expectation of significant growth, including acquisitions? So what's the dividend policy in coming years?
We are not going to pay at this point of time more than 500,000. It's a net amount, gross amount 625, as I mentioned previously. Why? And the rest money will stay in the company, and we have clear targets that all profits should be used for development of Storent.
Is there any hedging of the foreign exchange risk with a significant level of business in the United States now?
No, we didn't think about this at this point of time because U.S. business, we don't actually, we will not have a lot of cash flow between the US and Baltic countries. Yes, we invested in equity 14.1 million dollars in Storent USA. We put it money in equity. And actually, we do not have plans to move some cash between the countries only if we will need to add something. Additionally, we will move money to USA, or we will pay some dividends to the holding company from United States. But at this point of time, we are not thinking about some risks of currency exchange rate because they are investing in equipment. They are buying equipment in United States. They have all costs in United States, salaries, payments, everything in United States, and they are paying with the dollars. And we don't see any huge risks connected to currency exchange.
Thank you. Why do you believe you have to offer higher coupon rate than most of other recent Baltic corporate bond issues? And given latest bonds with 10% coupon is currently priced at a premium to nominal.
Actually, very, very simple. If we are talking about coupon rate, we used this, and actually we used some advice of our banks and analytics, and actually they advised to us not to change the coupon rate. We are actually not a big experts of defining exactly what the coupon rate should be. We are specialists in rental business, in digitalizations, but not in defining exchange rate. Maybe Baiba, you can add something on the top.
Yes, I don't think that we are in a premium level, so there are definitely higher interest rates also in the market. It's balance between the market demand and offering, and of course we want to have as much as possible investors in our balance sheet, and we think it's fair coupon rate compared to our bond conditions.
Thank you. Where is the minority interest of the 30% shareholding in the United States entity reflected on your balance sheet as of September 30th, 2025? So talking about 9 months financial statement.
Yes. Yes, of course.
So it's under equity, so there is not separated, divided, but it's under equity, and more detailed information will follow during
Annual
the
reports.
full annual report. Yeah.
But of course, it will be reflected like minority interest in our equity.
The EBITDA margin from United States operations appears higher than that of the Baltic business. Why there is the difference, and is it sustainable?
Yeah, this is as described previously in the April, why we actually have plans to go to United States. You should understand that dollar utilizations, we are calling in the Baltic countries like a payback, actually, how much you can get per year investing 100, for example, if you are investing buying equipment for 100,000, how much you can get per year as a rental income in the Baltic countries? This is between 25 to 35,000. Depends on the product group, depends on country competitions, but it's really very low prices here. In United States, in average, the price 2 times higher than in Baltic countries. And our payback in our Connect rentals, it's close to 50%, 49, 48%. For example, in Baltic countries, in Nordic countries altogether, if I remember correctly, we have something around 26, 27%, something like this. It's 2 times less because of the huge competitions market. It's in a Baltic market and Nordic market, very consolidated market. If you are taking, I don't know, 5 biggest players in each country, I think they usually between 70 to 80% from total market, rental market in these countries. It's very consolidated, overcapacity, prices low, and actually we are only one industry in the Baltic countries and Nordic countries. From 2008 up to 2025, our prices decreased by 2 times. Actually, all our costs increased, everything increased, but the prices decreased. That's why we need to be no smart enough to increase efficiency to get growth, which we had in the Baltic countries. For example, in this year we had 19%, if I remember correctly, 18, 19% in our own fleet. Bible, please correct if I do not remember exactly, but it's definitely 2 digits and close to 20. And that's why they have higher EBITDA margin. And this is not only in Connect Rentals. This is not only one company which have EBITDA close to 50%. Actually, I visited already a lot of rental companies. I had already a lot of discussions with the owners, small, middle size. They are in range between 40 to 50% EBITDA margin.
Mhm. Thank you. Does the current period include any material one-off items that should be eliminated from recurring profitability analysis?
No, there
Yeah,
are
we
no.
have some one-off items connected to USA Bible, or it's.
No. This
Or I
finance.
did not understand the questions.
No, there are no such. So of course we have costs related to the acquisition M&A deals.
Yes.
So that yes, those we have, but we also arrange the financing from the U.S. bank. So they will appear in the cost during the financing period. So only M&A deal acquisition costs.
Clear. Thank you. Next question. You mentioned that Storent will buy
It
10
never had so many questions.
right. We're going over time. We still have a couple of questions left if you don't mind
No. We
staying
are ready to
staying
answer
longer.
all questions. It's okay.
All right. So you mentioned that Storent will buy 10 companies in USA in the next 5 years. What part of market share out of 75 billion in USA are you going to hold under the Storent in the next 5 years? For now, Storent has 0.02% of targeted market share, if the person remembers correctly.
Yeah, if we are, let's say, if we are just simplified, if we would buy the same companies like Connect Rentals, approximately 15 million euro sales, we will have, I don't know, we will have approximately 165 million euro sales, close to 200. No, you can count yourself how big our part will be, but I think it's maybe not 0.2, but 0.2. We will eliminate 1 0. But anyway, it is nothing in comparisons with size of rental market in United States.
Mhm. Participants would like to learn more about the competitive environment in Texas. What are your competitors' strengths and what are your competitive advantages?
This is, as I said previously, rental business, it's very local business and based on relationship. Shell, one of our owners of Connect Rentals, he is in third generations in pipeline construction, for example. Yes, he knows, let's say, everybody who is connected to this industry. Cody had been working all his life in different positions, but also in constructions and welding machine renting. And they have very good relationships. They have very good network of customers, and actually they have very good reputations, which is very important in this market. And they have excellent service to the customers. This is, yes, they do not have advanced technologies, but they have excellent service to the customers, and they are winning national players because of this service quality, and mainly small and middle-sized rental companies winning competitions against the big ones because of the quality of service and reaction time, personal relationships. This is very important. Like it's important in our countries, in Baltic countries, in Finland, Sweden. It's also important in United States. But of course, it's a little bit different situations because there are a lot of job sites. There are a lot of projects starting. I checked some of them. Actually, I never saw so big projects, so big job sites in whole my life. Actually, what actually is going on today in Texas.
And the pro forma accounts, did you also include a full year interest charge on all new debt taken in the last 12 months?
Yes, of course, it includes everything. Yes.
Mhm. Will you need to raise equity to maintain bond covenants in the future?
Yes, I said probably not maintain covenants because we will not raise the money if we will breach the covenant. We will not. We'll go with M&A, which actually could decrease our equity ratio. Actually, if we can manage to keep our covenants according prospectus, we will go with M&A. If not, most probably we will wait some time to increasing value of a company and to raise the equity. Yes, as I said already a couple of times, we will be on some point of time where we will need to raise equity. It's definitely.
Mhm. Leasing financing is cheaper than bonds. Given that expanded business will presumably be leveraged with leasing liabilities, do you plan early repayment of bonds?
No, at this point of time, we are not planning early repayments of bonds, but of course, for capex in the Baltic countries, we are using leasings, but also not for all equipment we can use leasing. We said previously, banks in Baltic countries are very conservative. They are mainly thinking about the risks, and they are even providing leasing. They are asking a lot of guarantees and things like this. And if we are talking about M&A deals, it's only possible to make M&A deals using the bond monies. And once again, I would like to say thanks all our investors who invested and bought our bonds in April. Actually, without your investments, we would not be able to buy Connect Rentals and start, let's say, our. We had very interesting journey for 17 years, but I think from 2025, I excited of this journey, yes, during 17 years, but I think we will have more excited journey starting from 2025 because it's really opens new opportunities for the company.
It does indeed. Currently, we have three more questions to go. Since you consolidate US results into your group results, doesn't that create foreign exchange risk regardless of cash movements?
Yes. There, of course, we have to evaluate our assets based on
Based
the official exchange rate.
yes, of
So.
course. Yeah, you are right. Yeah,
Mhm.
you are right. Yeah.
How long are the founders of the US business committed to stay active?
At this point of time, we have 3 years. They committed that 100% they will stay. You should take also in account one of them is 60, another one 40. Probably it's could be different decisions for them. But at this point of time, we had excellent connections. Actually, it's very interesting that we are from absolute different part of the world, but we have a lot of similarities. Actually, Cody and me, we are both from very small city town. Yes, I'm from Pļaviņas. Who knows? Maybe this is very small town in Latvia. Yes, 120 kilometers from Riga. And actually, he also from Jacksonville. It's a 15,000 probably city. And actually, also these guys did everything themselves. Nobody helped them. Nobody gave them something and supported like I did also in my life. Nobody actually helped me, and where I am today, actually, I did myself, and with my team, with Storent team, who helped me, with my partner, who is my best friends, actually, Ariesta. We together studied in Riga Business School. We both had master business administration degree, and that's why we have common understanding what we are going to do and how we are going to do. And actually, he had been close to the Storent from the beginning. He represented me in a council of Storent from the beginning, and he not just came in 2022 and invested, and we merged some companies, his company and our company, but he was closed all our Storent history.
Thank you. Last question at the moment. I understand that the US company is 70% owned. Is the pro forma profit and loss statement for 2025? So, in this pro forma profit and loss statement for 2025, do the figures include 70% of the US company's results?
No, it's not correct because according to the FIRS, we consolidated 100% of profit and loss statement and balance sheet. And in balance sheet, we just need to show minority interest in the equity. We are doing our consolidations according FIRS standards.
Thank you for explaining. We have run out of questions. I think this is the right time to finalize. Before closing the call, I'm giving it back to Storent management for the final remarks.
Yes, so I want to thank you for all participants and actually invite you to the meetings with the owners, with the management. So we are organizing two meetings on the 19th of November. It's in Tallinn in Estonia, and Andres and Arya and me will be there, and you can come and ask even more question, more detailed question. And on the 20th of November, the investor event will happen in Latvia, in our office in Zolotūda Street 89. So more information will be on our webpage. So all those who want to know more and meet us and see the equipment, see the premises where we operate, all are very welcome. And I want to add that before making decision on investments, please read carefully material and make your decisions wisely.
Yes, and as I said, we had a very exciting journey during 17 years from 2008 till 2025. But I think we will have much more exciting journey in the future. Of course, if you will support our ideas, if you will support our strategy of development, and of course, if you will buy the bond, invest in Storent, and we will probably in one day you will become also our partners. I would like to say once again, thank you very much all investors who invested already in a company and who is going to invest. Without your support, without your investments, we won't be able to do what we actually doing. Thank you very much.